Bring in Requisite Capital's Bryn, Talkington, Odyssey Capital's Jason Snipe, and Big Technologies Alex Kantrowitz, all of them CNBC contributors. And I thank you for coming on to kick this around with us. Alex, let's just start big picture here. I mean, it's natural to ask, after this investment binge has been going on for a couple of years now, and it sort of tests the limits of just how much each of these individual companies can allocate of their free cash flow into AI infrastructure. When is the market going to say enough? They're not saying enough yet. What are your big takeaways from the numbers last night?
Look, I think as long as you continue to turn in good earnings, the market is going to give you the leeway to continue to build for this AI moment. Because let's say you're Amazon. You just saw Microsoft put on 39% cloud growth year over year. What are you going to now sit with your 17% growth and say we're not going to invest in what everybody's saying is the future of this? So I think there is two things happening. One is they're turning in great earnings. We saw that with Microsoft, with Google, with Meta. So they're actually making money. And then there's this competition. And I don't think you can be in a situation right now where you're bringing in those profits and saying, you know what, we're going to sit out. So I think this will continue apace as long as the numbers are good on the
I do see that from the corporate strategy perspective, where that imperative just sort of, one company's spending sort of begets the other one to match it and not fall behind. I guess I just wonder, I mean, the logical endpoint of that is someone's going to maybe overshoot what ultimate demand is.
I think it could definitely happen, but you're also seeing some positive signs here. I mean, one small example is Meta saw Instagram engagement went up 20%. That is, the engagement on Instagram was already massive. So if you're using AI, just a machine learning predictive thing to predict what people are going to be into and then grow your engagement and grow your earnings, you're now telling Wall Street a story that's like, okay, we're investing this money, and it's actually leading to results. With Microsoft, you have companies that are considering making the move to the cloud. But, in order to take advantage of the AI moment, you have to go faster. And so that's accelerating their revenue. So I think it's a story of the momentum, the revenue momentum that these companies are seeing. And again, as long as that continues, there's going to be acceptance and maybe even reward for the spending. But there must be a limit at some point. We're just not there yet.
Yeah. And Bryn, I mean, just to that exact point, Meta and Microsoft are two of these companies that really can, in a tangible way, say, here's how it's helping us in terms of customer relationships, in terms of advertising revenue for Microsoft, in terms of Copilot subscriptions. Maybe not every company has that exact direct linear relationship with AI spending and business results. But I guess from your perspective, what is it telling you about what you're willing to pay for these companies and whether you are going to continue to buy that rationale indefinitely?
I mean, these companies are not expensive. And so if you look at the growth rate and you see the innovation, I mean, Mark Zuckerberg's, the Meta call was like a masterclass. The excitement, the innovation, his whole conversation around hiring these dense teams around specifically AI. And then they're executing to the point you made earlier. There's like 6% more time spent on Instagram, 5% more time spent on Facebook. So while it may not be good for humanity that we're spending more time in clicking, it's falling to the bottom line. And so I think as long as you're getting this really big ROI, these companies are not expensive. I mean, look at Figma. You can't even make sense of those valuations. These are very low valuations when you compare to some of the froth you're seeing in the other parts of the market. And so I think that these, especially like a Meta, you're going to continue to see multiple expansion because they just delivered in spades. And I think it's early in the runway, and the capex they're spending is monetizing.
Yeah, I mean, obviously you have this elite class of multi-trillion-dollar market cap companies and then a lot of upstarts who kind of, their stocks get sold on the prospect that maybe they one day could be that, but have a lot to prove, I suppose. Jason, what's the, sort of bank shot impression of what those numbers we got from Meta and from Alphabet and from Microsoft to what we're yet to hear? In terms of Amazon, Apple still sort of out in the cold in terms of this particular type of theme, but how are you thinking about it all?
Yeah, there's no doubt about it, Mike. All the numbers have been good from Google last week, and obviously the concerns around search and the beat there and how much Google Cloud has grown. And then obviously, which Alex already mentioned, the Azure numbers, which were up 39% year over year. So, and then obviously it's also about the capex. Google increasing their capex by $10 billion. we're talking about Microsoft into 2026 potentially spending $30 billion in the first quarter, averaging out to 120 in 2026. So clearly this spending is happening, but the big deal for me is there's monetization. You're seeing that with Copilot, 100 million active users there, GitHub. There's a lot of growth there. So obviously that has been the story and the theme for the market so far this year. So I look for more of the same coming from Amazon. Obviously, Amazon is the largest player, in the cloud space. We'll expect $31 billion in revenue, 17% revenue growth year over year. I think for me, as it relates to Amazon, the big story for me is operating margins. I want to continue to see those grow. Amazon, AWS, 60%. Of the revenue contributes to op margin. So I think that's the number that we're all watching. But I think we'll see more of the same. Apple is a very different story. They have other problems to contend with, but I think we'll see more of the same with Amazon.